Sarah from Phoenix thought she was too late. At 54, watching her 401k shrink while Bitcoin headlines mocked her from every corner of the internet. 6 months later, she texted me a screenshot of her crypto portfolio, up 40%. Today we're talking about why being late might actually be your biggest advantage. This is Freedom Life 3.0. I'm Jay Scott, and this is Sarah's Catch Up with Crypto story. Sarah's story starts like so many of ours do. Corporate job for 23 years, diligent 401k contributions, suburban home, 2 kids heading to college. She did everything right, according to the traditional playbook. But then 2022 happened. Inflation, market volatility. Suddenly, that retirement nest egg felt more like, well, pocket change. When Sarah first contacted me, she had so many questions. She'd heard of Bitcoin before, but wondered if she could really trust it enough to put it in her retirement portfolio. She kept referring to the talking heads on the business news channel, saying that it was too volatile. It appears that the talking heads on TV think that it's a bad idea, but let's take a look through a different lens. At the start of 2022, the price of Bitcoin was around $47,000. By the end of the year, it was around $16,000. That's a 66% drop. Obviously, that's what they meant by volatile. In comparison, the stock market rarely drops more than 10%, which is considered a deep drop. So if you ask a financial advisor if Bitcoin is too volatile, most would say yes. But here's what I explained to Sarah. If you're in your 50s and you haven't saved enough to retire comfortably in 10 to 15 years, then you need to be investing in assets that can give you a return of at least 20% or more. I showed her the numbers, and the data shows something fascinating. The average 401k or IRA is usually investing in a 60-40 portfolio. That's 60% in stock index funds and 40% in bond funds. This type of portfolio returns a rate between 6 and 10%. If you started today, in 15 years, you'd have just over $1 million, which, well, that's not bad, but it's not really enough to live comfortably when you have no other income coming in. And of course, these numbers aren't adjusted for inflation, which would make these numbers much smaller. But when you consistently get at least 20% or more, you get more like $5 million in 15 years. And remember, Bitcoin has been averaging over 45% a year. After Sarah saw the numbers, she seemed shocked. She just didn't realize how much the rate of return mattered. She was always told that the stock market is the best way for her to save for her retirement, and that the closer you get to retirement age, the less risky you need to be in case the market has a downturn. So Sarah got it, and she went to work on investing in Bitcoin and a couple of other top crypto assets. She didn't just convert her existing portfolio over to crypto, she wanted to test things out first. So she started dollar cost averaging $200 a month into Bitcoin. That's where you just automatically have that money taking out of your paycheck every month. This way, you're getting a good average price as the market moves up and down. Once she got comfortable with the whole process of buying Bitcoin, she decided to try a couple other cryptos. She first bought some Ethereum and some Solana, which were the next largest cryptos, and her portfolio started to go up. Here's the key that I explained to her. Yes, crypto is volatile, and your portfolio can fluctuate up or down by 20, 30, or more percent. But in its history in any 4-year period, Bitcoin has always gone up higher than its past low, meaning that if you don't sell any of your Bitcoin in that 4 to 5 year time frame, you'll most likely be in profit. For me, crypto investing is not a get-rich-quick scheme. It's a 5 to 10 year plan that if you stick to it, you can catch up on your retirement and be able to sleep soundly knowing that your retirement years are going to be okay. One of the things that Sarah learned was that buying and storing crypto is not as hard as everyone makes it out to be. If you can do online banking, then you can invest in crypto. Now, moving your crypto to a crypto wallet is a little more complicated, but you don't have to do that right away. You can get comfortable with the process and build up your portfolio, and if you choose, at some point, you can move that crypto to your own personal crypto wallet. I hope you can see from Sarah's story that investing in crypto is not as hard as you may really think, and it's really one of the best ways, maybe the only logical way, you can catch up on your retirement savings. Living the freedom life isn't about getting rich quick. It's about getting smart, fast. Sarah proved that starting at 54 isn't too late. It's exactly the right time. If today's episode sparked something for you, subscribe to my channel for more real strategies. No fluff, built specifically for people who are done waiting for permission to build wealth. This has been Freedom Life 3.0. I'm Jay Scott. Keep taking action, and I'll see you next time.